Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 38,818, down 2.34%. Ethereum trading at 2546, down 0.49%. Moving across to the Ethereum tokens, we can see Link is up 6.54%. If you're new to the channel, everything I do for you is free. Twice a day, 7 days a week, I share my experience as a full-time technical trader with over 20 years of experience to assist you to be more of a financial blessing to yourself and those you love. I've hidden knowledge gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. Let's have a look at Rule 220, live with courage. Another word for courage is bravery. We are courageous when we move towards something that scares us. I always say that crypto is really volatile. It's full of fear of going up and fear of going down, fear of missing out and fear of not being involved. Crypto is a really, really hard market to trade. You need a lot of courage. I'd just like to share a little quote with you. You are totally unique. Comparisons are distractions. Just be you. This is a really, really important thing to bear in mind. The way that you approach your trading and investing is as unique as you are. Don't worry too much about what other people are doing. Just take the best bits and make it your own. Our community is about real wealth. There are a lot of YouTube stations out there promising so much money and a very easy life. The truth is, real wealth is much more than money. It's about love and friendship, independence, respect. It's also about having the courage to overturn and move past mistakes, trauma, media fear, and a feeling that you're not enough. These things happen all the time as we grow up. It's very easy to lose confidence because so many things happen to us as human beings. That's all the fake you. That's not the real you at all. The real you is rare and unique, always learning, understanding, compassionate. That creates the bridge to real wealth. Real wealth is our focus as a community. Rule 174, T-cube method, trend, timing, and trigger. We're into the trend and the early warning system in this particular episode, using the KS process. The first thing we do is that we try and understand what different investment vehicles are available to people. Stock market, S&P is a good proxy, plus 33%. Gold, precious metals are another vehicle for investment, minus 10%. Wow, gold's not doing too well. Bitcoin up 251%. It's really interesting if you look at this particular area that I've highlighted for you. This is Bitcoin's compound annual growth rate, or CAGR. Over 1 year, it's 251%. Over 2 years, it's around 90%. 3 years, 77%. 4 years, 93%. A lot of people are saying there are decreasing returns. As a statistician, I don't really see that being the case. I believe that Bitcoin and crypto are going to hit mainstream adoption. We're just getting started. Our community is dedicated to excellence. We're always about doing the best we can. When we look at anything, it's at the highest level of quality. Our goal is to become YouTube's highest quality alt crypto 10 trend detection system. Let's have a look at that. First thing we do is to have a look at the KS model. That's a crypto technical trading model based on institutional price psychology. We're currently in the bull market psychology sector of the current run. There is always a bull market, bear market consolidation. We're in the bull market phase of the current area. We can zoom out and have a look at the long view model, which has 4 phases. Phase 1 is that bull market psychology. We're just in that initial phase 1 right now. Cryptocurrency is growing exponentially. It's growing far more quickly than the internet adoption ever grew. In fact, 80% average yearly growth. When we compare the state of the internet from 92 to 2006 with the state of cryptocurrency adoption from 2016 to 2030, we're really early in that process. A report recently released by Crypto.com showed from January 21 to June 21, the users of cryptocurrency increased from 106 million to 221 million. It doubled in just 6 months. When we have widespread adoption, we also have legal issues. The Infrastructure Investment and Jobs Act is something that is being discussed in the media at the moment. I always love to go directly to the source. Here we go. This act is the Infrastructure Investment and Jobs Act. People are getting a little freaked out with this act. If we go to page 2433, and why not, just a bit of light reading, we see in section 80,603 digital assets. Okay. When we scroll down to page 2435, we see the definition of what they say is a digital asset. It's any digital representation of value which is recorded on a cryptographically secured distributed ledger or any similar technology as specified by the secretary. I want to draw something really interesting to your attention. Look at the date, applicable date, January 1st, 2023. This is interesting. It doesn't mean that it can't be applied earlier. I'm going to check more into this. But if it is what I think it is, this legislation is a little way off. I love reading the news every day, as regular viewers will know. And it's really interesting that I also really want to fact check. I want to dig deeply into things and see if what is actually being reported is correct. I think this particular date would be of particular interest. January 1st, 2023, that's a long way off. The real point to note is that as crypto users grow, of course this regulatory action is going to happen. It's required, it's normal. I would just give you a little knowledge nugget. Coming from a finance law and actuarial science background, it's really important to understand KYC and AML. In the banking and finance world, KYC is know your customer. That means that the government must be able to trace things, people, transactions. AML is anti-money laundering provisions. They're really important and embedded into the financial system. These two things, KYC and AML, are just a normal part of the crypto industry growing towards adoption, mainstream adoption. Just be aware of that. Now, what does that mean? KYC means that privacy coins will take a hit and they will be subject to some very onerous scrutiny. This is just the path to adoption. I know a lot of people don't agree with that, but it's important to understand that's just how the system is rigged. Another really great knowledge gem is to understand that crypto is driven by fear of missing out and fear, uncertainty, and doubt. When fear of missing out becomes so extreme, we get these blue spikes up, which are euphoria strikes. When the fear, uncertainty, and doubt reaches a very high level, we get a thing called capitulation. Capitulation is literally the word surrender. This is how the cycle of crypto goes. It's really important to understand that as well. We're a long way from either positive or negative capitulation at this point in the cycle. When euphoria takes over, the amount of unrealized profit spikes up. You see these spikes from past cycles. When that happens, what we actually see is the shorts coming in to squash that down when it gets unsustainably high. We're just here at the moment. We're a long way from the top. The miners also take advantage of this spike in euphoria. It means that they get paid more and more and more for selling their Bitcoin into the market than they do over the average of the 365 days preceding it. This is the Puel multiple. That's what it actually measures. We can see we're all the way down here. Wrapping this section up, what we see is that everything is on track. We're inside the bull market. Regulation is coming, but that is a good thing. That really consolidates the industry and makes it open for wide and mainstream adoption. It's really important. In our community, we have another goal: to become YouTube's highest quality early warning system for market sentiment shifts. One particular thing that we need to keep our eye on is health at the moment. Now, why do we need to keep our eye on it? Because it's really dangerous to your portfolio's health if health goes down and becomes a major issue. From the 12th of Feb to the 13th of March, we had the US liquidity crisis and COVID impacts. That saw Bitcoin sell off, this is just Bitcoin, sell off by 63.32% over 30 days. It happened rather quickly. Now, what that did to alts is it absolutely crushed them. When you think about this capitulation event, this is what I call the falling knife. That's what we want to buy. That's what we're always looking for. From this particular low, when things started to repair, it took around 136 days for it to recover to the previous price. When it recovered, it came up 172.73%. We always keep in mind price is negatively biased. If we get these down spikes, it's not necessarily a bad thing, but gee, you want to have cash. You don't want to be fully invested. So what I do as part of my work for the community, I look at any risk off events and I always just call them out. If we look into the NASDAQ 100, it sold off 32.1% over 32 days. It only took 74 days to recover because so much money went into the system, into the stock market. But it's really important to understand that when we get these early warning signs, I will be calling them out to you. With health, we need to keep our eye on the Delta strain. Over the past week, weekly case change is plus 12%. We want that to go to zero and then go negative. There were 4.156 million cases in the last 7 days. We're really keeping our eye on the weekly case change, percentage change column, noting all the particular countries such as the UK, it's reported 30% less cases. That's great. Spain, 10% less. Russia, 4% less. Indonesia, 5% less. We're really after understanding what's going on here. When we look at the most populous countries in the world, we want the weekly case percentage change to turn negative. We certainly don't want it to be positive. We have to keep our eye on this. I know this area of discussion is quite sensitive for some people, and I certainly understand. We're focused only purely on a crypto stock market related action. We don't want to get into a situation where you lose 80 to 90% of your portfolio because we're not looking at something. It's important how the world interprets it. We set really ambitious goals within our community. One goal here with stock indices is to become YouTube's highest quality stock index trend detection system. We want to understand the true trend, how it's changing, what's shifting, and we look globally. It's really cool. Let's get into it. If we look at Fidelity Institutional, they've got a really fantastic thing, global expansion, third quarter 2021. If we look at the US, it's in recovery, nearly mid-stage. Canada, just in recovery, just crossed. China, mid-stage. India, early stage recovery. South Korea, early stage. Mexico, early stage. Brazil, early stage. The UK, just in recovery. Germany in recovery. Italy in recovery. France in recovery. Australia in recovery, and Spain in recovery. Let's see how those stock markets are playing out. It's really important to note that the US market accounts for about 56 out of every $100 that is invested in stock markets globally. It's a really important market, as you can see here. Let's have a quick look at the VIX, the fear gauge of the main market, US market. We can see the fear is increasing. Let's have a look at the NASDAQ 100. We can see it's just under this support. Now I have another little knowledge gem for you. This is the inverse VIX overlaid across the NASDAQ 100. Look at this association we're getting. Very interesting, isn't it? What are we seeing? Weakness here. We would expect to see weakness here as well. Okay, just keep your eye on that. Another thing we do on the channel is to look at how Bitcoin is tracking against the indices. We can see the index has gone up. Bitcoin went down. It's now starting to stage a recovery. Let's have a look at the VIX and the S&P 500. This is the inverse VIX. Look at it. It shows very good associations. It's almost moving the market. You can see this increasing fear here because don't forget it's been inversed. Okay, let's have a look at the S&P. I'll just swap out the VIX and put Bitcoin's fingerprint in there for you. We can see that the S&P 500 is just under resistance. The Russell 2000 is just at this support, and we can note the Bitcoin fingerprint playing in on the background there. Let's look at the inverse VIX. Look at that particular correlation. Wow. Okay, let's keep our eye on this. The Dow Jones has backed off away from this resistance and now is moving into support. Let's have a look at the inverse VIX. Look at how the inverse VIX is playing out. Look at these sharp spikes, the association. We've inverted the VIX. Wow. Now, what does this tell us about current price action? The VIX, the inverse VIX, is going down. What do we expect to happen? What has happened in the past? It has gone down. The markets have gone down. If we get a retracement, that's not something to be alarmed about. That's really just normal price action, but it's always good to be aware. Let's quickly go through the other indices. I'm just going to leave the inverse VIX here so you can see what's happening. Remember when I said the US market is so important? I think you can see why. Canada is just above support. China's composite index, look at this association with the VIX. It's treating this once support as resistance and retracing away, resuming back down. Let's look at China's technology index. It's showing an enormous amount of weakness. The Sensex, India's stock market, we're seeing it's about midway, but it has some decent support coming through here. What about the Kospi 200, South Korea's index? We can see it's retracing towards this support line and it's resumed off. The Nikkei 225, we can see it is really quite weak in this down channel, but it's seeking to consolidate around this support. If we have a look at Mexico's market, the IPC, it is doing quite well. Look how it's actually broken above this resistance and it's just doing a slight retracement. That's very strong. Why don't we put a green next to that? Let's have a look at Brazil's index. Brazil is under this particular support, treating it as resistance. The UK, the FTSE 100, seeking to get above this once resistance and now turning it into support. Let's give it a green. The DAX 30, Germany stock market, sort of midway, just consolidating along that line. Neither here nor there, just currently. Italy, doing well. It is still above that once resistance and turn it to support, but it's not broken down. Let's look at the CAC 40. My labels are going everywhere. This is France's stock market. Look, it's really strong. Good on you, France. Fantastic. Australia's not doing too badly either. The ASX 200 is on a romp. It's romping away. IBC, Spain's index, it's recovering across this once resistance. Still got a little bit of a way to go, so we won't call it green at the moment. Let's look at the Swiss market. It's getting above that resistance. That's very positive. And let's have a look at Singapore's index. It's starting to recover. That's also great. So if we were to sum all that up, the inverse VIX is showing weakness in the stock market. We would expect some retracement, but overall the global markets don't look too bad. Central banks around the world have printed a lot of money that has flowed into all sorts of asset classes, the stock market, crypto, real estate, all sorts of things. It's really important that when tapering occurs, that means they're going to slow down the rate of printing money. When interest rates increase, that means it becomes more expensive to borrow money. And organizations that have borrowed at literally the world's lowest interest rates will have to start paying debt payments that could actually cripple them. So the issue of raising interest rates and tapering could in itself cause a black swan. We need to be really focused on this as a community in order to protect your wealth and protect your worth. Our goal is to become YouTube's highest quality early warning system for market sentiment shifts, especially in relationship to economic data. To do that, we don't follow the news. We don't really care about what the news says unless it's pointing us to a new data source. Let's have a look at the real M2 money stock. We see it's increasing, just decreased a little bit recently. We do all our analysis independent of the news. We just let the news be a signpost for us to do further research. Jerome Powell, the Fed Reserve Chair, said that when the Fed funds rate, which is currently 0.08, when it gets up to around 0.25, there will have been substantial further progress. Substantial further progress means liftoff can occur. Liftoff is the increase in interest rates and also tapering. We're keeping our eye on this red line. We don't actually need to know what the Fed is planning. We can see it in the graphs. That's why we're going to be way ahead of other people in this respect. It's good for us to keep our eye on the reverse repurchasing agreements, what's happening here. I suggest if you don't know about the repo market, it would be good for you to investigate it, research it a little bit. It's quite an important component. I'll do a whole special episode on it, but we can see the reverse repos, reverse repurchasing agreements, which is called reverse repos, are increasing. We can also see the monetary base total is increasing. It's been increasing a lot. The Federal Reserve's total assets is sitting at $8.22 trillion. You can see it's been coming up like this. The normalized GDP for the US is currently sitting below pre-COVID levels. I believe when we get up to this green area, we're going to get liftoff. Remember, liftoff means tapering and increasing interest rates, which could cause a problem. The Fed has said that they would give a lot of advance notice, but we need to keep our eye on it. Better to be early rather than to be late. When we look at all employees, total non-farm employment, we can see there is a way to go to get back to where the economy was before COVID struck. This is a new analysis I put in for you. Corporate profits after tax. You can see corporate profits after tax are increasing. This is across the different years. It's really helpful to note that the stock prices are being supported by increased corporate profits, which is actually really important because corporate profits really are the driver of stock market value. If we look at real personal consumption expenditures, we can see they are above pre-COVID levels. You will see a lot of news stories about the ISM manufacturing index. I thought I'd show it to you in graphical format. Here you go. You can see it was higher, now it's decreasing. Let's have a look at federal debt, total public debt. It's coming in over $28 trillion. Another little knowledge gem for you. If you look at the usdebtclock.org, you will see this incredible dashboard. Look at it, it's so cool. So many moving numbers. Unfortunately, the moving numbers are not so good, but it gives you an idea of how much debt per citizen there is, how much debt per taxpayer, how much gross domestic product. There's so many very, very fascinating things all summarized in here. I think it's terrific. Why don't you have a look at it? usdebtclock.org. If we look at federal debt, total public debt as a percentage of gross domestic product, it's sitting at 127.65% currently. It's come down a little bit, which is good. The Federal Reserve Chair said that in order to meet substantial further progress and have liftoff, that's literally tapering and raising interest rates, the unemployment rate would need to come down. He didn't give exact measures on what that needed to come down to, so I've put some estimates in here of what I think would be reasonable. Unemployment rate is currently 5.9%. I believe within the bound of about 4.38% to 5.13%, these are the green horizontal dotted lines here, we'll start to get an advanced notice of tapering. The Fed will want employment to have a suitable uptick. They won't want to kill it too much by increasing interest rates too early. I believe when looking at the employment level, these green lines up here will give us an indication when they will start liftoff. Looking at the employment population ratio, 25 to 54 years of age, I can see that we're really a long way to go before we hit back to the peak pre-COVID levels. I would suggest that these green lines here at 79.43 and up higher at 81.01 would be an area, a sweet spot, where the Fed would start to talk about liftoff. Looking at total non-farm private payroll employment, we can see that we have a bit of a long way to go before we get back to pre-COVID levels. When this trend goes up into this green area, we can get ready for tapering, but it's still under, which is good. Looking at the employment population ratio, we're still under that green band, where I've just put in an estimate of where I believe tapering could start to be discussed. When tapering and rising interest rates get into the market, they're going to spook the market. Doing analysis like this gives us an early warning system for detecting when tapering and increased interest rates may be about to hit. It's good to give this particular diagram some reference. The US population is around 333.36 million people. The US workforce is around 151.76 million people. Official unemployed is around 9.5 million. Actual unemployed is around 16.37 million people. At the height of the pandemic, when everything was selling off, all the markets were selling off, there were around 23.2 million people on insured unemployment. That's what continuing claims are about. It's actually reduced down significantly to around 3.269 million. Now let's zoom in here a little bit just to help you out with this. I believe when we get back to above the long-term average, which is around 1.8 to 2 million continuing claims, we'll start to see discussion of increased interest rates and tapering. It's also good to keep our eye on the 30-year fixed rate mortgage average in the US. It's currently at 2.8%. When interest rates increase, of course, the mortgage rate will increase. The Consumer Price Index measures the average price increase of a basket of goods and services, we can see that the CPI increase has been positive. It's really increasing. If situations become deflationary, we would expect the CPI to take a downturn. When we look at the long run CPI index from about 1966, we can see only very rarely does things go deflationary, and they go deflationary for a really good reason. There's an absolute drop-off in economic activity. Deflationary periods typically associate with recessions and depressions, as we can see here. Let's look at the 5-year break-even inflation rate. Remember, we're covering so much data so that you can protect 80% plus of the value of your portfolio. If we don't look at this information, anything could happen and we can get caught off guard. We don't want that to happen. You can see the price of Bitcoin in the background, this goldy colored line. Fed Reserve Chairman Jerome Powell said that the price stability goals of the Fed will be met when inflation is a long-term 2% rate. We can see that 2% has a way to go. And we can see inflation is actually being supported on the way up as well. The Fed wasn't really specific about which inflation rate they were talking about on what economic data, so we just have to cover it all. The 5-year forward inflation expectation rate is substantially above that 2%. It's spiked up, it's decreasing. As Jerome Powell said, he thought it was because of new and used cars and hospitality, the reason for the spike in inflation. If it is temporary, we're going to see it really quickly. Notice the association between Bitcoin. It's not causation, just association. This 2% red line is the one we're watching. The 10-year break-even inflation rate is also above this resistance. It's fantastic for you to look at different charts and see how they're all playing out. It's currently at 2.4%. When it gets down to 2%, we would think that the Fed's price stability goals are being accomplished. That doesn't mean that this is the one that it needs to come down to 2% on. We're just tracking them all. Let's have a look at bonds. We can see bonds are actually increasing in value. They're over this support. It's important to keep our eye on bonds. The 20 plus year, the TLT, Treasury bond ETF, we can see it's gaining strength and momentum. This can be a safe haven play, so we have to pay attention. It could also be because of the repurchasing, the repo actions as well. That's why I put the other graph in for you. The 10-year Treasury note yield is underneath this resistance. The 30-year Treasury bond yield is under resistance now. If we look at the higher yield corporate bond ETF, we can see it's below resistance. We need to keep our eye on this. Continued weakness would be a problem, so let's keep a close eye on this one. It's really important to make decisions on a confluence of different indicators, not just one. It's good to think that things need to line up either positively or negatively. A weakness in one thing does not mean a weakness in all things. The airlines are very sensitive to COVID and shutdowns, as we know from past experience. We can see the airline index backed away from that particular resistance. We'll just keep our eye on this. We'll give this one a red as well. The transportation ETF is just around support now. Whenever an economic event, a black swan, hits, you see a very sharp sell-off right across all indices and all major components. It's important to know that we're not seeing something like this now. Utilities can be very sensitive to economic changes. We see it's above this resistance, turned it into support. Gold is currently above this resistance, coming into another level of support. So it has support and support. We would expect gold to increase. Gold is generally geopolitically sensitive. If war breaks out, we would expect gold to spike upwards. It's a very natural thing for gold to do. We're not seeing that at the moment. We could say gold is okay, perhaps we just give it a green. Silver is mid-channel between resistance and support. Copper is one to watch. Before economic problems, copper tends to sell off very dramatically. We're not seeing weakness in copper at the moment. In fact, we've seen it get up above this resistance, seek to turn it into support. Bit of a failure, but this is not the kind of failure that I'm talking about. This is quite legitimate. If we time travel back, this is the kind of weakness that I'm talking about in copper. That signifies this all happened before the sell-off occurred. I think copper is one to watch. That's why I've given it a blue. Lumber has been really weak, as noted by this resistance. We're starting to get above it. That's a good sign. China coal futures are just literally at that support line. To understand oil a little better, it's like copper. Look at that weakness before the sell-off occurred. Copper and oil give us an indication. I'm going to turn this one blue, so it's really good early warning signal. So what's happening in the current price action? We can see a bit of a sell-off recently, but it's just attempting to get above this resistance. Nothing like an incredible amount of weakness. Let's have a look at light crude. We can see a very similar pattern. Note a high, a lower high. This is showing weakness at the moment. It really needs to create a higher high up here. But let's check out what happens. Let's have a look at the US dollar currency index. I've just done the normal VIX here for you so that you can see any particular associations between the VIX and the dollar. The dollar is just like a stable coin in the cryptocurrency market. It is a flight to safety. When the dollar decreases in value, it's like stable coins going red. It means money is flowing out of the dollar, so to speak, into other cryptos. We're talking about the stock market at the moment. Maybe I'll just go back to show you something. For example, if we look at total cryptos like this, the stable coins USDT, BUSD, USDC and DAI, they're green at the moment. They're going up in value. What do we notice about the market? It's red. It's going down in value. This interplay happens inside the stock market as well with the DXY. That's a little knowledge gem. It's a ripper to understand that. So we can see when we look at the VIX, which is the stock market's fear gauge, when fear goes up, the dollar tends to have a positive association. Not always, just tends to. Now let's look at Bitcoin's fingerprint. What's it doing? A commentator has claimed that the dollar moves inversely to Bitcoin. We can see that's not actually the case. Bitcoin has basically moved up as the dollar has moved up. The dollar moves down, Bitcoin moves down. I think it's just a synchronization of patterns. We know from all our analysis of Bitcoin in its 4-year cycle, what it's doing, where it's positioned in the bull market, that Bitcoin is about to decorrelate from a lot of other assets. I believe this includes the dollar. We'll just keep our eye on it, but it's really interesting to understand that there's a larger picture at play here. We don't kind of worry about the dollar too much. We just really worry about what Bitcoin's price action is doing, and you know we just pull it apart, literally millimeter by millimeter. In summary, we're some way off tapering and the increase in interest rates. We're not noticing a lot, well, really any particular structural weakness in the stock market at the moment. We can see certain indices are weak, but we're talking about real weakness, like sell-off kind of weakness, pre-black swan kind of weakness. We don't see any of that currently. It's important not to be freaked out by black swans. They always occur at some stage. We can't avoid them, but we can certainly try to minimize the damage as much as we possibly can. That's why we look and have created this early warning system that aims at being the absolute best early warning system out there. Bitcoin actually impacts the stock market. There's many stocks that are Bitcoin and crypto related. There are also flows between major gainers like the FANG stocks and technological substitutes like Bitcoin and blockchain companies. Let's look into that. We can see Apple is at support. Microsoft is showing a little bit of weakness. Google is showing signs of recovery. It's wanting to turn this resistance back into support. Amazon is showing, unfortunately, a lot of weakness. That is a very severe drop. Facebook is showing weakness, but it's still within the boundaries of normal price action. Tesla's getting ready to rocket. Excuse the pun, Elon. It's above support and doing well. Nvidia is showing strength. That's excellent. It's repairing that lower high. PayPal has been selling off, but not as much as Amazon, but that is still weak. Netflix is showing weakness, but trying to get above this resistance, but not having much success. Square is making a play to break out above these previous highs. Let's have a look at Bitcoin. Bitcoin has currently done a really fantastic job of getting close to this resistance. It's quite heavy and it will be heavily defended by sellers. Also, Bitcoin has come up so fast that people will be taking profit. So having this particular sell-off means really nothing to us. It's just a normal part of price action. Bitcoin is currently trading at 38,186. If we look at total market cap is $1.527 trillion. It's coming back as a market to this support. The Grayscale Bitcoin Trust is coming back to support. QBTC, the Bitcoin fund in Canada, is coming back to support. BitC, CoinShares physical Bitcoin, is coming back to support. BTCC.B, the Purpose Bitcoin ETF, is acting with strength here. It's coming back to support. ARK Innovation ETF, ARK-K, is showing a degree of consolidation. It's a bit weak. It's below this resistance. ARK Next Generation Internet ETF, ARK-W, is below resistance. Coinbase Global, with the ticker COIN, is at this particular support. There is an up channel of support as well. Galaxy Digital is seeking to challenge this resistance line. MSTR MicroStrategy is above this support line. Riot Blockchain is maintaining this upward level of support, seeking to challenge this key resistance level. Silvergate Capital was doing really well, but has since been rejected from this particular line and it's turned to resistance. Marathon Digital is just below resistance. Voyager Digital is yet to break out from this resistance. Hive Blockchain is doing its best to get over this particular resistance. Bitfarms is actually showing a lot of strength. We'll keep our eye on this one. Argo Blockchain has bypassed this resistance, turned it to support, and is seeking to consolidate. It's another one we'll keep an eye on. Bit Digital continues to perform extremely well. We'll keep our eye on this one. This one is actually a blue, which is a very, very good performer, not just a green. ADE, Bitcoin Group, is just at resistance. It's nearly turning it to support. Hut 8 Mining Corporation is just below resistance. Let's have a quick look across the alt ecosystem. We're basically trying to identify strengths and weaknesses across the community recommended alts. Let's go quickly through the alts. Rune, above resistance. Anchor above. Neo coming back to support. Sia coin coming back to support on weakness. Luna above, maintaining that support line quite well. Dot maintaining support. Quant just coming back to test that upward support line. BTG at support. Link at support. Solana experiencing some weakness. DGB under resistance. XRP just under resistance. 0x ZRX under resistance. Uni selling off under resistance. TEL is above resistance currently. T-Fuel showing weakness. ICP showing extreme weakness. MDX showing weakness. Sushi showing weakness, but a degree of consolidation as well. Argo selling off. Doge showing weakness. Comp just under this resistance. SHIB showing weakness. Theta consolidating. Harmony 1 consolidating. Matic consolidating. Mana just seeking to turn this resistance into support. IOTA just a little bit below that support. ICX maintaining, broke out across this resistance, turned it to support, seeking to continue up. Synthetics just showing a little bit of weakness under the resistance. FTM under resistance. Axie Infinity selling off but seeming to consolidate around this particular area. Kava showing a lot of strength. Tomo consolidating. STX showing strength. We'll just go through and see the other ones. Ethereum starting to show a little bit of weakness here. BNB showing weakness. ADA showing weakness. Bitcoin Cash under resistance. Litecoin showing weakness. Ethereum Classic consolidating. XLM consolidating, showing a little bit of weakness but mainly consolidation. VET pretty much the same as XLM, showing a little bit of weakness but a degree of consolidation around that area. Filecoin upward momentum. TRX Tron upward momentum, it's looking reasonable but it's under resistance. XMR showing weakness under this particular resistance. Aave showing a little bit of weakness. EOS under resistance. Cake under resistance. FTT looking quite good. It's been rejected but it's still above support. The graph above support. Maker showing weakness underneath resistance. Atom showing a lot of weakness here actually. It hasn't managed to break above that particular resistance line just yet. XTZ showing weakness but in a bit of an uptrend. It's a little bit hard to read that one. AVAX showing weakness. BTT just under support. HBAR at support. Decred showing a lot of weakness, selling off. Engine selling off. Zilliqa underneath resistance. KSM just consolidating currently but showing a little bit of weakness. Chili's consolidating. Waves consolidating. EGLD showing a little bit of strength here. This is one to watch. Let's just put a green on that. Dash just under resistance. XEM under resistance, got a degree of sell-off here. ZEC, pretty much at the support. HNT, selling back to support, just under a little bit. YFI, under resistance. HOT, under resistance. OMG, under resistance. NIA, under resistance. BAT, basic attention token, just under resistance, almost at support. BNT, under support. QTUM, just pretty much at support. Zen, under support. Ontology, at support. CRV, showing weakness, under resistance. Ravencoin, consolidating currently. CTSI, consolidating. AR, under resistance. DENT, showing weakness, under resistance. DSLA, just at support. IOST, showing weakness, under the resistance. Cardia chain, selling off quite significantly. Nano, consolidating under resistance. NMR, trying to get going there actually. Let's give that one a green. It's showing an intention spike. This is a little tip for you. If you've stayed with us this far, can you please put in the comments something about intention? Just weave it in. We'll have a bit of fun with that. Love to see what you write. Syntropy is doing quite well above that support. Rose just coming back into retest support. RSR consolidating below support. SPI underneath support. Super showing weakness under support. SXP showing a degree of strength. We'll keep our eye on this one. Looks quite interesting. VRA showing weakness underneath support. VRA showing weakness under support. XVG basically consolidating, trying to make its way back to that support line. And the last one, HEX. Wow, HEX has sold off quite a lot. HEX is very lightly traded. I didn't find it on a lot of exchanges. That one is a community request. If you're new to the channel, I'd like to send you a very warm welcome and thank you for viewing. I hope you found this content useful. I would also like to thank our moderators. They do an amazing job of keeping the community free from spammers. You're awesome. Thanks so much. And of course to our community at large. Wow, what an incredible group of people you are. I love to see the comments. I love to see the messages. Thanks so much. If you have any questions, I'm always very, very happy to include those answers throughout different videos, upcoming videos. Please feel free to reach out anytime. We have groups on Facebook, Discord, Twitter, and of course the comment section in YouTube. Everything we do is 100% free. I do these videos to assist you to be more of a financial blessing to yourself and those you love. If you would like twice daily updates, 7 days a week on price movements in the crypto market, please subscribe to YouTube and follow our groups. We would love to have you there. Please always remember, crypto is volatile. Prepare yourself for the best and the worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.